once again, it's the same narrative, same story. I sound like a broken record. We're waiting for a recovery in the prices. If the prices recover, all of these companies will run because it's very cyclical. And once it starts dumping, it dumps. And once it starts running, it runs. So fingers crossed, and we'll all make money. And I know a lot of people actually have Sibanye, a very, very popular stock. So if this is you, it is probably you, the viewer. Fingers crossed for the turnaround narrative. If it happens, we're going to make some money. If it doesn't, it is what it is.
Hello everyone, welcome back to another FinMeUp Stock Spotlight, where we cover the most important stock market news that happened during the week. This week, we also have the budget speech that took place in South Africa, so we'll also touch on that. We'll also be looking at 4Sight, which is one of my picks for the year. That's been performing really, really well. So we've got a really good one for you lined up today. Just two quick announcements. The first one is the new FinMeUp baskets on Easy Equities is live, both on the South African side and the US side. Just go check it them. Log into Easy Equities, go to baskets, and you'll see the various FinMeUp baskets with the different themes. And secondly, you can once again book a call with Paul over here, chat about finances, chat about investments, chat about what's happening in the world. Whatever you want to chat about, it's free. It's a quick call, and it can only give you insights. So let's get into today. The first part of today, we'll quickly look at things that's happening in South Africa. So Standard Bank expects the South African Reserve Bank to cut interest rates 4 times in 2024 with a 25 basis points cut each round. I'm really happy to read this. Let's hope it is true because I've got a home loan. So everybody with debt would be happy reading this if it comes to play. Secondly, their chief economist expects the interest rate cuts to begin in the second quarter of 2024, so not too far in the future. Then, for the budget speech, the finance minister is opting to raise additional personal income tax by not adjusting the personal income tax brackets, commonly referred to as the bracket creep. Just quickly want to pause there. Paul, what can you tell us about that?
Yes, Higgo, so this is an interesting one. So they are now getting additional income tax from South Africans without it seemingly so. So they're not adjusting the actual tax that you're going to pay, the percentage-wise. So let's say you earn 100,000 Rand this year, and that puts you in the 20% tax bracket. So it's still 20%. It's not like you're going to pay 22% all of a sudden in this financial year. But what they did was they didn't adjust it for inflation. So how this works is if you earn 100,000 Rand this year, or let's say last year you earned 100,000 Rand, the equivalent of 100,000 Rand last year is 106,000 Rand this year because of inflation. So it's supposed to, without getting a raise, right? Just the equivalent amount. But now they're keeping it at 100,000. So on the original 100,000 Rand, you'll still pay your normal 20%. But now on the next 5,000 or 6,000 Rand, you'll actually go to the next tax bracket. So it's like we are charging you without it seeming as if we charge you, because it was supposed to be 0 to 100,000 Rand, for example, was this tax bracket. And now it should be 0 to 106,000 Rand should be the bracket. But now they're starting the next bracket already at 101,000. So it's a weird thing to wrap your head around. The point is that you're not paying more percentage-wise, but actually you are paying more. But maybe we'll link the article in the description so you can read up on that.
Cool. Yeah, so for more info, go read a bit more on that. Link is in the description. Now for the two-pot system, this is the last one with the budget, so stay with us. This is important. It impacts you, most likely. So the two-pot retirement system is set for 1 September 2024, so this year. From the implementation of the two-pot system, all contributions to retirement funds will be split into 2 components. 1/3 of the contributions will be credited to a savings component, and the remaining 2/3 to a retirement component. So the main idea is to promote the preservation of the retirement fund savings until retirement, while also providing investors with access to savings in the times of need and desperation. So having said that, and a lot of insights to take in, Paul, as a financial planner, what do you make of this?
Yes, Higgo. So in a nutshell, I don't think this is the best move for South Africans, because how a retirement annuity typically or how it works is that once you contribute to a retirement annuity, that money is locked. You can't withdraw the money, and that's a good thing and a bad thing, right? A good thing that you look after your future self, so that's your nest egg. You can't touch that. It's also a bad thing. The flip side is that you can't touch the money. So you want to go travel, you want to start a business, you can't touch that money. Now, I would like this idea where you actually have access to a third of the money, because that's essentially what this does. It says, okay, if you contribute, you have 2/3 is locked away, not the whole thing anymore, and you actually have access to 1/3 of the money in the times of need. Now, there's always times of need. That's the problem. And the problem is that South Africans, only 6% of the population have enough money when you retire. So you don't have enough. So either you have to keep working, or you have to die sooner because you don't have enough funds to sustain yourself until 85, 90, or your kids have to look after you. And that's not ideal at all, because now you become a liability, a financial liability on your children. So in theory, this is a good idea. In practicality, I'm not a fan. So anyone contributing to an RA, which is most of our community, everyone has an RA, you will now be able to access 1/3 with this new system. But please, guys, be careful. Don't use the money. That is your nest egg. That is your retirement money. Rather use something else, or just wait a little bit with your business idea or your wedding or your emergency, whatever it may be. Just wait a little bit. Don't access this money. I've seen it too many times. It's so sad when people get to retirement. They need 5 million. They only have 2 million. And it is what it is. It's too late.
Yeah, so if you want to chat more about the two-pot system, once again, you can book a free call with Paul. Now, getting into the stock news this week, the first company is one of my stock picks for the year. It's also in one of the FinMeUp baskets. You can guess which one it is on his equities. And that is 4Sight Holdings. It's actually so far my best performing stock out of my 10 stock picks. If you missed that video, link is in the description. So 4Sight posted the results. The share price is actually down a bit after these results, because the share price was up over 100% just from even 8 January when I made my picks. So it ran too hard. For more details, I'd recommend you go read it. But the revenue grew by 34.9%, operating profit grew by 70.6%, headline earnings grew by 127.8%, so that the earnings per share. So some proper growth on both revenue and the earnings. So really happy with the results. But obviously, when I made the stock pick, it was 50 cents a share, and it is now around 88, 90 cents a share. At a stage, it was R1.20 just before the results. Incredible results. This company, since the new CEO came on, they've just been operating, and they're operating in the right space at the moment. They are doing a bit of consulting, a bit of annuity income, and they are aiming for that 70-30 split of 70% of the revenue being recurring revenue, which is beautiful because it happens without you having to do more work, and 30% not annuity based, so once off. The reason why I think we are seeing this revenue growth and this overall growth is, it could be, there's a new CEO, some new focus, new direction, but also they're operating in artificial intelligence, and they are expanding their geographic footprint. So the mix of quantity, and also they are in the right industry, it really works for them. And I hope it continues working for them, especially for my stock pick. So overall, really happy with the results. Happy that it's in my portfolio and in my stock picks. Let's see how the rest of the year goes. Next company, Northam Platinum. Their earnings per share is expected to decline by between 86.4% and 96.4%. And the headline is also around about those figures. Paul, what do you make of this? We know that Platinum has been taking shots. All Platinum miners have been taking shots. What do you make of Northam specifically?
Higgo, Northam is a good company. I know they're a Platinum player. Of course, we all know what happened to Platinum this year because of its use case. It's used in combustion engine vehicles, but it's not used in electric vehicles. And we are making a structural shift, not in South Africa, obviously, but in the developed nations, towards electric vehicles, which basically diminishes the use case of Platinum. But Northam is a good company. What they can control is their costs and also the units produced, which is up for the year. The cost is lower. The units produced is up, but the price of the product in the market is down. It's like you're a coffee seller in Stellenbosch or something, and you sell coffees at 30 Rand, and all of a sudden the coffee prices drop to like 10 Rand a cup. And you sell more coffees, but it's at 10 Rand a coffee instead of 30 Rand. That's not on you, right? That's just how it is. So all we can hope for is that the price of Platinum will increase again. Northam will do better. Impala will do better. Amplats will do better. Sibanye, it will be great for everyone, and we can make some money, especially for South Africa, because we are commodity heavy. But at the moment, it's not looking that great. But we're betting. We fingers crossed for the prices to to turn around.
It is a cyclical business, and so is all of commodities. So another commodity player, and this one is very, very well known, especially among Fin Twitter or Fin X. I don't know what the newest word is, and that is Sibanye Stillwater. So horrible results, and the share price has been taking a massive beating over the past, I don't know how long now. Their earnings per share is expected to decline by over 100%, and their significant decline in profitability is mostly due to the lower average metal prices, excluding gold in 2023. So there's been, in all commodities, we've seen a downward trend. Gold is the only one that is actually, I think it's up a little bit. I don't follow gold too closely. But all the other metal prices took a hammering, and therefore the miners took a hammering. Also, they had an impairment of 47 billion rand due to operational repositioning, cost increases, and other various factors in their operations. So, not looking too good. Share price been taking a hammering. The question is, will it take a further hammering? With this results, I'm on the sidelines. Paul, what can you tell us?
It's that impairment is massive. That's a big slice of the pie. 47 billion, and the current market cap is 60 billion. So it just puts it into perspective how big that impairment actually was. Once again, it's the same narrative, same story. I sound like a broken record. We're waiting for a recovery in the prices. If the prices recover, all of these companies will run because it's very cyclical. And once it starts dumping, it dumps. And once it starts running, it runs. So fingers crossed, and we'll all make money. And I know a lot of people actually have Sibanye, a very, very popular stock. So if this is you, it is probably you, the viewer. Fingers crossed for the turnaround narrative. If it happens, we're going to make some money. If it doesn't, you know what it is.
Then the last company for today, Caxton. Both Paul and myself are fans of Caxton. Caxton is also one of my picks for the year, amongst one of my 10. So they issued a trading statement, and their headline earnings per share is expected to decrease between 4.1 and 8.5%. Their earnings per share expected to decrease by between 27.6 and 31.3%. So looking at the earnings and the headline earnings, it's not looking great. But that's not the reason why I like Caxton. The reason why I really like Caxton, especially for this year, hopefully they manage to unlock some value this year. Maybe it happens only in 2 or 3 or 4 years. But is their cash. Their cash flow is in such a good position. The total cash is now 2.1 billion rand, 2.17 billion rand to be precise. And the market cap is around 3.1 billion rand. So around 60% of their entire valuation is in cash. Okay, so cash with our interest rates, they're just earning more and more cash from that in the form of interest, and they are actually still generating profit. Although we are seeing revenue declines, little earnings declines, they are sitting on some solid cash, which positions them for potential further growth or potential value unlocking. Paul, what do you make of this trading statement?
Yes, not the best, but not the end of the world at all. Like you said, a big chunk of the company is actually in cash, and at the moment, interest rates are very high. So it's almost like if you invest in Caxton, all of your money is essentially in a fixed deposit at the bank at like 9% or whatever. And then the other 40% of the company is the operations. And now you have to ask yourself, okay, how much am I actually paying for that 40%? What am I getting for that 40% that's not in cash? And in my opinion, like I've said multiple times, and once again, you can just link it up here, John, the video, the deep dive, is that I think you're getting a lot for that amount of money. The bang for buck, printing, the publishing, the packaging, everything is running smoothly. And so we'll wait for the actual results to give some deeper insights, and then I'll actually elaborate on the figures a bit. But I still think this is a great company. It's at a low PE. It's getting a 6% divvy. We all love divvies. And I think there's a bright future in the next year or 2 or 3. And like you said, if they can unlock the value, hopefully they can do it soon because I want to make some money. But this is my long-term play. Caxton, I have a significant position in Caxton.
Yeah, for me, it's more valuation play than this. I don't think they're going to shoot the lights out with revenue at all. Also, just worth noting, the reason why there is a material decline in earnings, they also issued this as a note in the trading statement, was largely attributable to the profit on the sale of private property in the previous year. So that profit was 78.9 million rand in the previous year. So there was obviously an increase in earnings then. Where this year they had a loss on disposal in Novus, not sure how to pronounce that company. of 45 million rand. So there was a loss this year of 45 million, where it was a profit of 78.9 million last year. So having that in perspective, maybe the results isn't that bad if you look on a like-for-like basis. And so good valuation. Let's see for the full results before we give more insights. But we'll be back next week, once again, with Stock Spotlight, covering the most important stock market highlights. And once again, you can play the FinMeUp quiz on the FinMeUp app. It's available on App Store and Google Play. And you can build your streak, climb the leaderboard. And the best thing of it all is it is free. And also, every time you play the quiz is an entry into the weekly investing voucher prizes. So you could just, it's basically you can play and maybe you win something. I hope you have a great day. I hope you have a great weekend. Thanks for being with us. If you haven't subscribed to the channel, just a reminder if you don't want to miss future videos. And if you enjoyed some of the insights, consider liking it. It goes a long way. Cheers.